Hey guys, IPXO webinars got back again, and it's really great to reignite those since we had quite a big pause for those webinars, but how can we live without them? So today we are introducing a new series of webinars that we're going to host every month. And this time we're going to be much more fun, much more insightful, and I think you're gonna see a lot of interesting people, a lot of interesting topics. And today I would like to kick off with the IPv4 Leasing Outlook for the next year. Let us introduce to you. My name is Vincentas Grinius. I'm a co-founder and CEO of IPXO. And I have with me Paulius Judickas, who's Vice President of Strategic Alliances, and Edvinas Bakanas, our Senior Product Manager. So today we're going to review what is happening with the IP leasing market, a little bit of correlation between the IP acquisition data, and it's really interesting that no one even thought about having those type of webinars from the IP leasing perspectives. So it's great that we actually came up to that idea. Right. So perhaps, Paulus, you want to kick off with some numbers where we will get the discussion started and some interesting topics to cover.
So, just like Vincentas mentioned, we will start off by giving you a brief rundown of the transfer market because it's an integral part in IP leasing market, in the whole IP ecosystem. So while we were used to seeing records in terms of IP transit volumes being broken every quarter, every year, whenever we were in pandemic, the numbers slowed down a bit since 2022, and you can see it on the graph on the left. But still, 2022 was a record year compared to 2020, 2021, and any year prior to that. Fun fact, within 3 years, more than a quarter of a billion of IPv4 addresses changed hands. Whether it was, a part of mergers and acquisitions or regular transfers, and most of the IP addresses are moving in their own respective home registries. You can see that on in the diagram on your right. So almost 90%.
And it's probably interesting to see that quite a big chunk of those IP addresses got into hyperscaler hands.
Oh yeah. So these are actually numbers I have in hand. So Edvinas and Vincentas want to play a quick trivia. Try to guess what percentage, a rough percentage of IP addresses goes to top 3 hyperscalers in the world since 2022, at least.
73%.
Edvinas, any guesses?
I would go 75.
Okay, it's a big overshot, but yeah. So 2022. 70% of the whole IP transfer market went to, our top 3 hyperscalers. 2023, 65, and this year so far, we're at almost 70%. So no less than 2/3 of IP addresses are being gathered in, 3, sometimes 4 enterprises, depending on the year.
So what will happen if hyperscalers will get the biggest chunk of IP addresses?
The scarcity will become even larger. Less and less companies will have an access to resources to scale, to grow. And, I don't want to speculate this, but we might become dependent on those 3 guys sometime in the future. What do you think, Edvinas?
Yeah, I think, from one perspective, they are kind of aggregating those IP addresses, but it also helps a little bit the leasing market to grow. So it depends from which side you will look at, but it's kind of alarming from one, if we're looking from concentration of IP addresses in only a couple of hands, in the future that might affect the whole internet thing.
And another thing that IPv6 definitely will not gonna be a helping hand at this case, because we know for a fact that quite a big portion of Asian market, Latin American market, etc., they are solely depending on IPv4. We see some developments happening on the IPv6 perspectives, but that's really all about the mobile operators in most of the cases. So yeah, it's really alarming. Anyway, let's continue, Paulus.
Another fun fact I wanted to check. Well, at least I had some ideas before I looked into numbers deeper, but this is it. So in short, these graphs displays how total amount of IP addresses changes within registries. It was quite surprising to find that Aaron is actually bleeding the most IP addresses every year, while RIPE is the only registry which is growing in terms of their IP inventory. I looked into this a bit deeper as well. Apparently, there's one of the hyperscalers we mentioned, Microsoft to be specific, managed to carry out RIPE across the board because, well, they are transferring all of the resources they're acquiring to RIPE and CC. It doesn't matter how many IP addresses RIPE bleeds throughout the year. Pretty much a single hyperscaler can change the numbers, tip the scale into RIPE's side. And again, we could, yeah, go ahead.
Yeah, and that's probably not a secret why. We know how friendly the membership fees are at RIPE. The actual ecosystem is not so red-taped as others, other registries. And it's really sad to say that in most of the cases, a lot of registries look very narrow and basically thinking about only their region. I think we should also think, in more global scale, because internet is a global thing. It's not a regional, right?
Yeah. Absolutely. I completely agree, but RIPE and CC is the most forward-thinking registry out of all five. And just like you've mentioned, the fees alone can justify the transfers to RIPE and CC. In comparison, RIPE charges $1,600 per year for RIPE members, no matter how large their inventories are, while ARIN fees can go up to $256,000 per year. And LACNIC, actually, they are the champions of overcharging, if I can say that. They can charge you up to $365,000 per year, depending on your inventory size.
But coming
one
back
more
to
thing.
yes, but coming back, to let's say, a hyperscaler, it's not an issue for them to pay, that big of a membership. It's definitely not an issue. I think the biggest kind of issue is the constraints of a policy. That's why I think the biggest obstacle is for a lot of the LRIs.
True. One good example for this is actually legacy space. So if you are a holder of legacy subnet and you would decide to transfer it, whatever transfer you make turns your legacy IP addresses into, well, let's call it regular IP addresses. RIPE provides a possibility, an option for IP holders to keep that legacy status for their subnets by signing non-member service agreement. So it might not be, the crucial decider on which registry to choose, but if for some cases, in some instances, and we know this for a fact, that IP holders decided to move to RIPE and CC specifically for this purpose. I think we can move on unless you guys want to chip in anything else.
You covered everything well.
Yeah, just a small remark from my side, just what I just notified that also because Dubai is in RIPE region, we see some movement in Dubai as well. That some of layers are moving IPs to Dubai before selling those or doing monetization. So I think it's early to say if it's going to be some place for having IPs, but we see some traction there and growing monetization from that region.
Actually, that's a really good point, because it wasn't only Microsoft that grew in RIPE, while they were biggest by far, like 5 times compared to the second place holder. MENA region in general is growing lately pretty much the fastest in the world. And Saudi Telecom was, well, in the top three. They were in third place in terms of IP addresses transferred from other registries to RIPE, with 1.2 million IP addresses.
Yep.
Thanks for adding this. Now, IP transfer market recap in terms of transfer pricing change. There is no secret, and a lot of people already noticed this. Large subnets for the last at least 3-4 years, as I remember, were always the most expensive ones, with a price gap being close to $20, sometimes $30 per IP address. The reason to that, again, it was hyperscalers who were buying in large quantities, and those enterprises are looking into IP transfer as a single action. It doesn't matter how many IP addresses you transfer in one go. More specifically, what size of subnet you transfer, you still have to do the whole procedure. So they thought that, hey, there is no point in moving /18/20s. Why don't we go for /16s and up? Meaning you can, get way more IP addresses in a single transfer. And just like Vincentas mentioned, money is no issue for them. So they were focusing on large subnets mostly. And while the prices were soaring over 50, sometimes low $60 per IP addresses for large subnets during the pandemic, currently we definitely see a decrease in pricing, especially in that large subnet group. And guys, maybe want to discuss, what are the main factors for that? What are the reasons?
Rumors say that there are things changed in the actual hyperscaler instructions how we acquire the IP addresses. We also hear from the IP holders who actually coming to us with the large chunks of IP addresses and wanting to monetize them instead of selling, because currently the offer price went down from $45 to $25 per IP for the large subnets. And what that shows? Well, we can only presume that hyperscalers are on the budget. And the pattern that we see, but it's definitely a speculative information, that once AWS introduced the IP charges for the IP addresses, we noticed that those prices started to go down. So there are, of course, kind of presumptions that they are on a budget, and right now they calculate every dollar that they make from those from that IP income, and at the same time, that's the budget allocation they have from that revenue. So that means that they have to now start reducing the IP prices. If I was one of the hyperscalers and we would be only the free players in the market, I don't know. Very easy to control it.
Yeah, you dictate the pricing.
You dictate the pricing, exactly.
One more thought I had, and I heard this from a couple of large enterprises who were discussing potential selling of their resources, but currently they're holding off exactly for this reason, by the global price drop, is that during the price peak times, so during the pandemic, late 2020, early 2021, pretty much all the way down to 2022, they started exploring the idea of potentially selling their IP addresses. And, but most of large IP holders, it just so happened historically, those are large old school enterprises, which, aren't moving fast, as we are well aware of that. So it took them, well, naturally, a year, 2 years to prepare for such project, to maybe free up the resources to restructure their networks. And by the time they're ready to sell the IP addresses, there are loads of old enterprises who are ready to do the same, meaning the market is a bit overflooded at this point. And again, just Vincentas, like you've mentioned, it benefits the biggest buyers because they are controlling, as we now know, 70% of the market.
Yeah,
absolutely.
I would agree just with Paulus, and this is what I heard in some conferences, that also not the big enterprises, but some big telco groups, they have implemented some CGNAT and opened up a lot of IPv4 resources, and they're kind of ready to put them on sale or try just to earn something. So that's one thing. Also, moving to some of infrastructure to IPv6 also freed up some of their IPv4 resources. So I think at the same time, CGNAT is very, very popular now, and being increasingly implemented in telco networks, which frees up a lot of IPv4 addresses, and that's what also contributes to the increased supply of IPv4s for sale.
Absolutely. And I think that another thing, what we have to keep in mind, that since we understand that IPv4 address is quite limited resource, CGNAT is helping to kind of dilute, the amount of IPv4 addresses that's available over IPv6. And I think that's definitely a good thing. And we definitely will see CGNAT cases happening to telcos and mobile operators. But I don't see this happening in the infrastructure provider side, because in most of the cases, when we talk with many infrastructure providers, they actually disable IPv6 for the security purpose, because in many cases we have a quite big loophole when enabling IPv6, because a lot of the end customers of the infrastructure providers simply don't use IPv6. So why to keep it enabled while you have security loopholes otherwise?
And guys, what do you think? Can the current economic downturn have an impact on IP prices as well? Because companies are looking to, sell off
100%.
assets.
100%.
And apparently
100%.
IPv4 addresses are super liquid assets.
There are things to consider here. Then we had, I was telling the story many times. Then we had the pandemic period. We had the new terms on the corporate level: digital transformation, work from home, all that kind of stuff, right? What happened then? We saw companies like Zoom, Miro, were booming, because, well, people simply needed tools to communicate and to, pilot the projects. So all those tools, of course, required an infrastructure. The infrastructure, the IP need came, right? But after all, after the pandemic was over, it became sort of irrelevant. And then we had, this economics downturn, because, well, there are many factors why it happened, and still quite a big economist, said that we were at a very unique situation, how we had this economic downturn happened. Right. So always we must remember that a crisis brings the new opportunities. The downturns, the crises, they bring new opportunities. And in this case, I think that this price and economic fall is definitely a new beginning, and I think that we will learn from that a few things. First of all, is that IPv4 still will remain with us no matter what. But it's gonna cost a little bit less until the economic will start to grow, and then the new projects will gonna will gonna kick in to be executed. So I think that's what dictates the IPv4 prices in general.
So I guess it's reasonable to call it readjustment rather than a fall. We were seeing inflated prices, and currently we were getting back to, well, our more usual levels of a pricing.
So
But
I mean,
the time will tell.
there is no digital transformation, and work from home really does not work, So everyone's coming back to office.
Okay. So thanks for a quick
Actually,
recap of a transfer market.
we have our webinar from our offices, not
True.
from home.
That's exactly true. I'm gonna finish off with transfer market. We can go into IPXO's market stats now. So
it's much more interesting than IP acquisition.
Absolutely. So, dear viewers, listeners, I'm now showing you the market stats of our IPXO's marketplace, and you can see the graph of IP addresses that are listed in our ecosystem since the launch. And IPXO marketplace grows steadily since we launched it 3 years ago. Currently, we have over 4 million IP addresses, and we plan to finish this year with at least 5 million listed in the ecosystem. And as you might see from the graph, while we had a pretty stable inventory size during 2023, so last year, after that, a really fast breakthrough as soon as we launched the platform, because it was a completely new thing in the market. We were already in talks with some companies. Then we have this steady period.
And of course, we transferred our test pilot from our previous company, so it was quite a chunk that we migrated as well.
Yeah, we didn't start from zero. Let's put it this way. But you can clearly see there is a strange jump in the beginning of a really steady growth since the beginning of this year. And well, in my opinion, there are a couple of factors tied to it. And first of all, and most of all, as we know from speaking with large IP holders, that loud announcement from AWS that they are changing their own static IP pricing, and meaning one static IP now costs over $40 for their customers per year. And this sparked a lot of curiosity of large companies that we have either already onboarded, or we are in talks right now. They were curious, they got curious, they heard about IP address leasing in general, and they started actively looking for ways to monetize their assets. This brought in quite a few IP addresses our way. Another thing, at least in my opinion, is cogent communication securization. And Vincentas, I know you're a big expert on that topic. Mind telling everyone what happened with cogent communications, why this impacted IP leasing markets a lot, and what's up to come?
I guess, we all are experts in this topic because many of the guys were asking the same question to us. So, I think that, Cogent did a really, good strategic move, first of all, having in mind that IPv4 is a revenue generating source, and we can call IPv4 as a commodity. You like it or not, but it's definitely a commodity. And Cogent, they proved it, because they proved it by issuing a security note of $206 million by securing their future IPv4 revenues. So I think that, that move definitely impacted the whole market. And, looking at the graphs of our market stats and the way it's growing, those two signals from AWS and Cogent definitely boosted the growth of our ecosystem. And we definitely see that, the education of IP holders is there, and they come educated to us, and they know what we are talking about, because previously, like, a few years ago, we needed to explain the basics of what is IP leasing. So right now, we definitely are very well aware of that. But, we are on a mission here to educate the market further, and I definitely see that IP leasing should be, and I definitely believe we will make it a standard thing and practice in the industry here.
Yeah, just couple of things from my side. I remember when those companies came, those big enterprises, after the Amazon announced about the price increase, that we are leasing for the same price as Amazon, like for $3, $3.50 per AP, and they were quite kind of unhappy when they understood the price that of our marketplace, that it's like 7 times cheaper than Amazon, and the ROI kind of castle just was demolished from their thoughts.
But
So that
yeah, sorry.
Yeah,
Mhm.
but I think that and Cogent and Amazon basically what they did is they did a big trust and awareness of this market overall, especially in the US market. With especially Cogent, they kind of gave a trust for everybody else to go for and to look for monetization opportunities. And that is kind of legal to do that, because we are constantly fighting with the policy thing and education part, where we're saying that it is allowed, it's possible to do, and we can handle those questions.
And I
And
remember the calls that you mentioned where guys were saying, so Amazon charges $42 per year. Can we make at least 35? Let's make it a bargain.
yeah, but you see, guys, it's not about the price. It's also about the capabilities. I mean, Amazon gives you a huge capabilities with those IP addresses, right? You enter their ecosystem full of, like, I don't know, products, features, that you can spin out, with their instances, right? You can create a 5G tower, with AWS. So it's definitely, value there, for that price. So I think that it's really, incorrect to kind of compare, the wholesale pricing, and the actual end product pricing. Also, one thing to remember, that they are providing, they can provide a single IP address, while in our marketplace it's a minimum of /24. So we are the wholesalers of the IP leasing. And
I
mhm.
Go ahead.
Carry on.
Yeah. So personally, I wouldn't even call AWS's IP leasing as leasing and such. It's a more of an add-on service. It's an
Not an
add-on.
add-on. I don't think, no. It's actually the essential part of service, because how you can
True.
spin out the service, and it would be visible publicly without IP address. So it's an essential thing.
But I think it was good just to understand for everyone about the pricing and the capabilities of this, because everybody was talking about the IP price, not the service price, in most of the articles during that time. So I think that gave the credibility for the business, that IP has a price, and I think that's from my point of view.
Absolutely. Okay, guys. So we have our IP count in our marketplace, our inventory size. The next graph I wanted to show you is our utilization rate. You might have noticed that well, within this year alone, we grew at almost 30%, but utilization rate does not seem to be affected by that. We are seeing, a steady, sometimes a really sudden growth in IP addresses in our ecosystem, but utilization rate stays really stable, rarely goes down below 80%. And from my perspective, at least, what I'm thinking, that this is a great example of a current demand for IP addresses in our marketplace. And you have to keep in mind that we are not the ones controlling the pricing. We rather allow that for IP holders to decide. So as we see more IP addresses added to the platform, we see more and more IP addresses priced reasonably, and this is keeping the utilization rate really high, actually. And yeah, the leases themselves are happening fairly fast, even for completely new holders that are just testing out the waters of our platform. Any thoughts on that?
I think that what we still need to kind of see is how many of the the top 5 industries are really depending on the IP resources. My point is that we see some of the companies actually making decisions to lease IP addresses instead of acquiring them. That's one thing. So we will see how this will progress in the future. But at the same time, a lot of providers, essentially telcos, and essentially in regions like LATAM, depending on their IP transit providers. And in most of the cases, what we see that the large telcos that control the big chunk of IP addresses, they also kind of stopping the advancement of the IP addresses. And in that case, what we see that more and more of those companies are coming to us, and more and more of those utilization rate spikes we see as we progress and scale the infrastructure. So that's my take on keeping the demand there.
Yeah, couple things from my side as well. So we were at pretty high rates of leasing before the summer, especially. We have reached almost 250,000 IP addresses per month in May. And that's because I think what we opened for a lot of companies, especially like hosting cloud providers, that they understood that they don't need to overinvest. They can always find IP addresses when they need. They can get those IPs fast, and more and more companies recommended to their colleagues to come to us. We're not gonna show those numbers, but about more than 30% of the clients are coming with their recommendations, even though we don't have a referral program. So that just show how good the service is.
It's on the roadmap. Yeah, and another thing that it's interesting that some of the companies don't even kind of considering buying IP addresses because of the LRI policies. So, for example, RIPE is not the case, but if you are in APNIC or LATNIC, well, I'm not even talking about AFRINIC, then it's definitely for them not a question to buy. They rather lease it because it's much easier to do it, and they scale much faster without some sort of waiting approval or whatnot.
Good thing that you mentioned RIRs. My next slide shows what RIRs, our IP addresses, well, not our IP addresses, but rather IP addresses in our platform are coming from. So you can see that almost 2/3 of all IP addresses are coming from RIPE, almost 30% from ARIN, and the remainder of the REST-free registries only makes up for 7% of IP addresses on our ecosystem. And it's no coincidence, but those three registries are the ones that pretty much prohibits monetization. So the percentage you're seeing only consists from legacy space from those regions, because, registry policies does not apply to those. Simple correlation. RIPE and ARIN together combined has almost 60% of global IPv4 allocations. Furthermore, a lot more companies or enterprises that has large IP pools, and they could spare some IP addresses to use towards the community, monetization, leasing in mind, and getting some revenue out of those IP addresses are coming from RIPE and ARIN, because those are the oldest registries. And as I mentioned, current policies in APNIC and LACNIC prohibits IP monetization, while in reality, those are the regions who suffers from IP shortage the most. Just like Vincentas mentioned, ISPs within
some
LACNIC
clarification.
Mm-hmm.
So LACNIC, if we will dig deeper about LACNIC's policy, it does not prohibit the IP leasing.
Sure.
It's just they have a gray zone that they are afraid of, basically.
They have connectivity requirement, if I recall correctly. Same goes with APNIC as well.
Yeah. But still, their waiting list, LACNIC's waiting list, is 10 years. 10 years. So what I see here, and that they definitely are suffering from the IP shortage, but they also are helpless to adopt IPv6, because how can you ask everyone in Latin America to switch to IPv6? It's impossible, right? So this is I think is a chicken and egg question in that region. What really looks sad, that the region, it's a good example how region is not looking broader and from business perspectives of how they can optimize things rather than red tape the policies, their own ecosystem.
True. And
I will just
go ahead.
I will just clarify one thing. Just so the piece in our marketplace, from this region. But what Vincentas mentioned, the policy of monetization. But all RIRs are allowing this to lease and use IPs from different or any RIR for their for the company.
Yeah.
So we have way more than 1% of our clients from LACNIC region or APNIC. So we definitely have more. Sometimes they prefer just to lease from those regions, and we will see in the next slides. But there are a lot of clients coming from LACNIC that they're leasing IPs from RIPE or ARIN region.
Correct. And while policies in those registries, let's not call it prohibits again, while those registries has that gray zone in IP leasing, they are trying to play by their own book, and we respect that, obviously, where company has to return the IP addresses to the registry's pool if they don't have a need for it. But let's be realistic. We were talking with loads of large companies, and we know for a fact that most of the guys chooses simply to announce the IP addresses to make it seem that those aren't used, rather than return the IP addresses. And it's just pure logic in my perspective. They might not have a dire need for the IP addresses right now, but they might be planning for the expansion in the future. So returning the IP addresses, while it would look good based, again, on the policies, on the books, it's a bit of a, stupid move, to put it. Because, again, Vincent has mentioned, LACNIC currently has almost a 10-year waiting list. And after 10 years, you're receiving a small /24. Best case scenario, you might receive a /22 if you're a really large enterprise. But what is the point of losing millions of IP addresses, again, which you don't have a use case for them right now, but you're planning to have in 5 years? And so you're basically just keeping those in your back drawers rather than allowing companies, even from your own region, to scale, at least for the time being. Maybe they will have, enough monetary power to buy some IP addresses of their own by the end of the day. But at the current setting, there are large players which are pretty much controlling on how fast the other competitors of theirs are growing in the region. And this creates this discrepancy between realistic and logical policies versus idealistic policies. Again, but these are only my thoughts.
Well,
Feel free
I think that we should look at this from a very kind of cultural and regional type of things. Like I had the chance, and you guys had the chance to talk with those registries, and we said this is what our community is, and this is what our community wants. So you can't say that they are right or they are wrong or they are logical or not. It's all about regional, and what my point here was that actually, we have to look at a global scale of the internet, not just some sort of a regional, because that's where that discrepancy is created. It's created within that bubble of a region. But one region, could be helpless if you're not merging the others to it. So I think that's the whole internet's philosophy. That the things should be shared, the things should be global, the things should be scalable, and it's definitely should be no limits to anything in the internet. Well, we can argue about the content, but that's another topic.
Okay.
Anyway, so let's move on.
Average price per IP address within our ecosystem. Edvinas, maybe you want to cover this.
Can shortly just go through this chart. So yeah, we see some changes in average price per IP during these years. There were some changes in the market. How we saw in 2023, 2024, the price drops. Dropped in our platform mostly because we signed some bigger contracts and with commitments, so long-term commitments. So that was one of the reasons why sometimes the price dropped, but also the amount of IPs in the marketplace and the price push and the drop in the IP price itself, buying in the buy and sell market also affected the average price. And we see that in the market very clear that some of the IP holders that may be considered of selling IP addresses because of the price drop, they decided to wait for some time and add it to our marketplace to monetize. And just because we are not controlling the market, sometimes we see some changes in the pricing. So we had the lowest part last year with the pricing. At the moment, it was increasing a little bit, but now I think it's stabilized at some point, and we'll see where it will go.
I'll jump into the next slide. So another thing we decided to look into, what subnets are the most popular ones? We had a strong gut feeling that it could be the /24s, and apparently it is. Almost 90% of all of our leases happens through /24s. And again, my ideas, a couple of reasons for that is, and this is what I heard from our leasees. First of all, managing the IP addresses for their internal networks. It's a lot easier for them to, have the defined /24s rather than getting a larger subnet and then splitting it up internally. Diversification of their IP inventory being one of the reasons I've heard. And there's a new trend, a new pattern arising where they assign different subnets, different ranges to different type of customers. And this is particularly prominent in the hosting industry. And Edvinas, I know you have a couple of ideas about exactly this.
Yeah, I think what we saw and what we hear from the clients that, as we mentioned before, just we are working a lot with the hosting company. So what they're doing is they're buying project based. So they can grow pretty much when they need or pay as you go with /24. Maybe sometimes it's not the most efficient way from the network perspective, but from the cost perspective, it's one of the most efficient ways. Also, that gives them better segmentation in case of abuse or DDoS areas. So I think that's why it's becoming more and more popular, not just to buy a big chunk, but pretty much in smaller chunks.
And I think most of our IP leases got used to the fact that the time to production, the delivery time for the subnets, at least for us, is, well, hours rather than days or weeks as it used to be back in the day. IP lease price changes per registry. We told you we have a lot of data, so we're just chopping through it. So yeah, you can see the price changes for each of the registries' IP addresses year by year. And this is something that Edvinas already hinted you about a couple of slides back. But this is what we're seeing right now. So as we mentioned, there's a huge scarcity of IP addresses in, well, at least 3 of the regions. And we see their pricing trends going up the most, while RIPE, again, we have the most IP addresses coming from there. IP holders recognize the benefits of getting steady revenue from IP resources they don't use. So they became more flexible with their pricing. Any other ideas, guys?
Well, I think that, the more IP addresses you have from, the registry, the more competitive those prices are. And that clearly shows, what is happening, for example, with Latnik, at some point with APNIC as well. So we know for a fact that, for example, Afrinic is quite a heavy stuff to manage at some point. So the most flexible, of course, is a RIPE and IRIN, where you have the most automation, let's put it this way, because they're the most automation supportive resources. That's why I think, the more of those resources you have from those regions, the better price you can stack up.
Yeah, I will still add just to this that we hear the difference between the cheapest ones, subnets that you can get sometimes in Lacnic, from, for example, from Cogent, or in the same APNIC from Cogent, and from the local telcos is very big one. So even though they are kind of paying here like couple cents more than from other rares, but it's still a very, very good price for them because the local providers can provide only like 10 times more than this price. So
that's also true. Yes, absolutely. Yeah. Yeah.
Okay, so our takeaway: charge more for those. Noted. Edvinas, would you like to walk us through the top leases in terms of industries and countries within IPXO marketplace?
Yeah, so I can. So we don't have a lot of changes. This is like the latest data, but we have some changes in popularity or market size from those industries during those 3 years that we overviewing at the moment. But proxy, if we are looking at just as an industry, so it's dropping mostly every quarter in our portfolio. We have a growing part from hosting cloud providers and little by little from telco. But we expect the bigger growth from telcos in the near future, as we are seeing bigger interest from the regions that we mentioned, Latin and Asia, especially big need for IPs from those ISPs from those regions. So that would be on the first part of the table. As for the countries, so the United States still takes the biggest part or the biggest chunk of the pie. Then we have Lithuania, a local kind of market where we are pretty well known. United Kingdom, UAE, Ireland, Cyprus. So no big changes. We are pretty much growing in the same market. But I think the recent quarters we are getting more traction from Asian markets and Latin America. So we will see probably in the lowest, at least some changes in the next quarters in the lowest part of the table.
And the viewers will have to tune into our next market recap review in 6 months to know better what happened.
Yeah, absolutely.
Next up,
Absolutely.
top ASNs across the board. So guys, what do you think? Why are we seeing these big names? These are the top ASNs, but most of our IP addresses, most of the IP addresses, at least from us, are announced on.
So
I think,
I can just comment that, for example, AWS, we had with the price increase, a lot of attention from the companies that are using Amazon services, and they lease IP addresses. Amazon has pretty good and well documented bring your own IP feature. Where companies can bring their IPs from companies like us and use them in Amazon. The benefits are really good, cost saving, and it can scale way better with this feature rather than having some limitations on Amazon when they're using Amazon IP address. Also, it just enables them for multi-cloud solutions and so on and so on.
Vincentas, you were about to comment something as well.
Yeah, so I think that in many cases, of course, AWS and Cogent, these are like pretty much obvious companies why we see on the top of a position. The others, there are things for the other companies, like for example M24/7, where we get the alternative customers, and there are many other providers like M24/7 where their customers actually are choosing to switch from the cloud to the on-prem infrastructure. And what we heard so far that at some point quite a few companies are switching from hyperscalers to on-prem infrastructure. And for obvious reasons, of course, for the cost saving. So these are the things why we see that. And of course, if we look at the, telcos like AT&T and such, so these are also, the IP providers for the business customers. And that's why we see also those type of telcos on top of the list. A fun fact that we connect right now around 1,100 ISNs globally, and that number is growing. But still, we have a lot of ISNs remaining that are not in our ecosystem, so we keep on working.
Leave no ASN untouched.
True that, yeah.
Yeah. Okay. So we checked the statistics of a marketplace. We discussed quite a bit about those. Now about the outlook for the future. Where are we going with IP leasing prices? Where are we going with IP addresses in general? I have a few points on this slide. So personally, I see no reasons for IPv4 addresses both leasing and buying prices to go down, well, significantly anytime in the future. That's why I think it's a good idea to call it readjustment, the pricing readjustment, what we're currently seeing. And the reasons are have been heard a million times already. It's still a continuous shortage of IPv4 addresses, especially in the expanding, growing regions. Limited supply, increased demand in terms of, well, let's call it hoarding of IP addresses, where again, free players manages to buy out 70% of a whole transfer volume. The transition to IPv6 is still really slow, and there are, both technical challenges, monetary challenges, and even lack of awareness due to IPv6 to some extent, and obviously economic factors. We are seeing large inflation. We are seeing quite a bit of market speculation for the IP addresses, and as the demand of IPv4 addresses continues to outpace the supply, it is likely to see the lease prices to go up little by little, just like we are seeing the same pattern with IP buying prices in the coming years as well.
But I would say that it's more like a speculative information, because
Absolutely.
the disclaimer, speculative information.
Don't trust anything.
Yeah, because it could be also the other hypothesis that, for example, IP addresses, IP acquisition prices going down, then we might see a lot of IP addresses coming to the market, and that kind of supply would bring IP address leasing rates down. That's also a possibility. And all what we can say that let's put it this way: we only can base our information on the previous events, but I would not say that our information is is the information that you have to consider it's
trustworthy.
Well, trustworthy. Who else knows better things about IP leasing than not us? Who else? Who?
Exactly.
I mean, the market is so niche, but it's also pretty crucial. That we can only have our information based on the previous events, but how the market will act or how it will develop remains to be seen.
Yeah, absolutely. Only time will tell. We would all have bought loads of Bitcoin back in the day if we only knew.
Bitcoins, yeah, bitcoins, or GPUs, yeah.
or that.
Or GPUs, yeah.
Yeah, one quick slide I wanted to, well, we're nearing to the end, and I know our listeners are probably bored by us right now. I wanted to give a couple of tips to
let's do not be so boring, then. Let's keep on going.
Exactly. So I wanted to give our IP holders, or those who are looking into IP monetization, a couple of tips on how they can improve their monetization velocity. This applies to our marketplace, obviously. So first of all, competitive pricing. Do the market research. Don't expect to get $30 per IP per year. As Vincent has mentioned, this is a wholesale. This is not an add-on or retail of IP addresses. Realistic lease term expectations, being flexible with lease terms. We hear it again and again with pretty much every IP holder coming onto our platform, but they're expecting no less than a 10-year lease agreement. Well, it sounds good, but in reality, most of the IP leases tends to at least first try out the IP leasing, try out the IP addresses they're getting, and then they might think of switching from month-to-month lease basis to some longer-term lease contracts. RPKI delegation to IPXO. This one is actually the big one. This allows us, well, at first, like and foremost, this completely frees up the hands for IP holders themselves. They don't have to lift a finger, and the platform becomes truly fully automated. At the same time, we have customers who are expecting to have IP addresses delivered to them, within hours, within minutes. So RPKI delegation definitely enables that. And the last two is uploading your whole IP inventory and not keeping it hidden, as some of our IP holders tends to do. This gives their IP addresses way more visibility, way better chances, finding the suitable subnets for them. And yeah, by implementing these 5 simple strategies, I think IP holders can significantly enhance their IPv4 lease out velocity and maximize the value of their own asset.
Few things here to kind of highlight that RPKI, I think, is the best thing what ever happened to the internet, because we still see a lot of LOAs and those PDFs flying around, but RPKI as such is the key element of making a much more secure internet. So we can't stress enough how important the RPKI development is, and I think in the future, even for IPv6 type of things and networks, RPKI must be a mandatory thing.
Edvinas, wanna cover some topics, some key points from the leasee's perspective?
Yeah, I have added 3 key points in this area. So, and this is what we are hearing from the clients, and probably what we will see even more in the future. And the data even show that. So they want flexibility to make changes. And what Mincentas mentioned, there are only very few clients that wants to sign very long commitments, even though when they sign some commitments, they want some changes from time to time in those contracts. The second thing, we see that they are constantly evaluating ROI when comparing buy versus lease. So especially telcos who still thinks that IPv4 will not go very fast. So if like the lease price goes up a lot and the buy price per IP for buying goes down a lot, they just still sometimes consider those options. And the third option is what we also mentioned before. The fast access to IPs will be very crucial. It's related to the second point when thinking from the financial perspective. Getting fast when the project is coming is really important, especially in those regions where to get IPs is very hard. LACNIC, APNIC, nobody can wait for 7 months until the transfer will be done from other regions. They need it. They need now, or at least they need tomorrow, and we can provide that. And I think that will be very important part to grow the leasing market. It's very simple. I think those 3 are very related when we're talking about this leasing market, how the public cloud evolved. So those, I think, are very related to our market growth.
So we discussed a lot of factors that impacted both IP buying, IP leasing prices. We had AWS, we had Cogent case, public cloud pricing increase, the sheer volume of IPv4 addresses available on the market. Guys, what do you think? What other third-party factors can have an impact or already has an impact, but we don't feel it as of yet, if there are any?
I would say one it's not mentioned here. So if the hyperscalers will still gonna buy the biggest part of IPs, the scarcity of IPv4 in the market will be even bigger, and that could increase the price for the lease. That's what I would add to this list.
Actually, we have raised hand from Mike Burns.
Yeah, Mike already sent us a question over the chat. I can read it. RIPE allows temporary transfers. Do you allow or support this with your current lessors?
Absolutely, we do.
With lessors, yeah. Actually,
With
Mike,
lessors,
as of
yes.
lately, yeah, we are structuring a couple of temporary transfers with some of our larger IP lessors to make things easier, to make the management and again the delivery time for the leases shorter.
To expand a little bit on that, so RIPE's temporary transfer is a good thing to add and forget resources, because some of the IP holders do not want to be related to those IP addresses when they are monetized. At the same time, it's also very important to keep the compliance at the highest level for the IP addresses. So this is where we also try to work on the proactive IP reputation scanning. Of course, the KYB, know your customer business type of thing, is also very important, because this is where all of the things happening. When you board the customer, you must understand with who you going to have a relation with. So it's crucial. It's vital thing here. So the responsibility of the temporary transfer is definitely a big one, and we have to maintain the whole cycle of while IP addresses are monetized in a perfect shape. So this is very important. I just wanted to highlight that.
I don't see any more questions coming in. So, Vincentas, maybe you want to wrap things up?
So the what we're going to see the next month, from our webinar, we going to launch the engineering update, and I'm gonna have two guests from IPXO. That's Yeva and Edvinas, who are driving our product development, and we're going to recap on the things what we have developed within this year and what's on our roadmap. So this is a little bit of off topic, but I definitely invite you all to join us in the next webinar we're going to host next month. And the other two webinars that we're going to have will gonna be pretty interesting, because it's gonna be a surprise, but I can give you a hint that we're gonna talk about IPv6 and its development, and we're going to discuss a little bit of the data harmonization type of things. So we're gonna have very interesting guests. I'm sure you know them very well. And as of today's webinar, so I think that we're going to roll out the next one about the Outlook, about the IPv4 Leasing Outlook. I think it's scheduled on January next year, right?
I think so.
Or something around that time.
Mm-hmm.
Yeah. So we definitely will keep you posted on the things, and if you can provide us more information or feedback how we can improve our webinars or become less boring, then definitely fill up the forms that we're going to provide you. How we're gonna provide you? But it's by email, right?
By
Polish.
email. By email. Yeah.
By email. Here you go. By email. So that's it from us today. I hope you enjoyed our webinar, and let's keep on smiling. And thank you very much, everyone, for participating. Thank you.
Thanks everyone for joining.
Thanks. Bye.